Crude oil WTI struggled at 82.6 levels again and has reversed strongly and given a serious attempt to fill the gap which is lying till 76 level. Yet yes, it is very close to achieve these levels. Now what to expect next week? Can we expect a complete filling of the gap and a reversal from there, and it is going to resume its downward journey in this trend in this channel, or we can see a reversal because it is already given a breakout? Which position you should take in order to profit trading crude oil WTI next week? We will see with the help of charts followed with indicators, and towards the end I will give you the summary, the analysis and the conclusion with the trading levels. Do watch till the end. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon which keeps you updated with the twice a day analysis which I share for crude oil. First with the Asia session, next with the US session. 2 videos a day. Do press the bell icon. Also, you can keep yourself updated by being part of my Telegram channel. The link is mentioned in the description. Let's start. Now look at the daily chart. See, I told you in the last week's analysis, lower highs, lower lows, trying to create a flag, and then it breached 82 levels and 81 levels successfully. Now once it breached 79.8, remember those were the levels below which further bearishness was remained, but at the same time it is yet to fill the gap till towards 76. Yes, it has gone very close to 76.3 levels, 76.7 levels, but still little shied away from filling the gap. So can we expect it to fill the gap next week? Yes, very much possible. See, two candles and a reversal candle. In this candle also lower highs, lower lows. So this is still after three strong bearish candles. This is trying to trade sideways. There is a possibility that it can trade sideways before filling the gap and before bouncing back. Yes, right now it is back in this long term bearish channel. It tried to give a breakout, it sustained the breakout, but again I think this is still a gap filling exercise, not a complete reversal, and hence we have to remain watchful and cautious with this. So for next week, yes, there is a very good probability that it can completely fill the gap and reverse from there. That is the first part to it. Next, yes, it is back into the channel. It has given a breakout, but it is back into this bearish channel. Right now, we have to wait for it to break out beyond 82.6 and 83.5 zone in order to confirm the rise there. Also, if you look at now, see, previous two candles, lower highs, lower lows, which also means that if it trades above this zone, first at 79, 78.8, 79.2 zone, and then 79.8, 80.2 zone. This zone for $1 is going to remain a very, very strong resistance zone. And hence you have to take a trade only if you see it trading on, or one can keep the long trades, the buy trades, if you see it trading above 80, 81 zone, then and then only. Now let's have a look at the weekly. Now looking at the weekly chart, see, after long time, first time it has given a gap up, it has tried to stay bullish, but at the same time, as many a times I have told you that 84, 85, 82.6, this zone is a very important resistance zone, because beyond 85 it is directly going to land at 92.5, and then beyond that 100 levels are going to be seen. So right now, yes, it has given a breakout, however failing to sustain. Also there is a gap which it is trying to fill. Now for next week, remember this is the first red candle, stronger red candle. It may try to trade in this, and there is a good probability that it is going to get a good support at around 75 levels, 74 low zone. Now see this multiple candles getting the support here at 74, 75, which you should be watchful of. Now look at the monthly. Now see on the monthly chart, still previous candle increasing body size here, and see this preceding candle has a very long tail, which means prices fail to stay bearish and it is closed in a good note. Now this month it is already started on a bullish note. Now I will wait for it to break past 74 and then 72 levels. If it breaks these two levels, then certainly more bearishness is going to prevail, and then I will be looking forward to higher lows and higher highs. Higher highs are done if it breaks past 74, then only further bearishness is going to be seen, and we are going to look at again 70 and 68 levels. And this is something you should be definitely cautious of. Higher highs, higher lows, which means 67, 68 zone as a very good support. So first, let it fill the gap till 75.8, 76. Then wait for it to break past 74, 75 zone. If it does stay below 74, just stay short in crude oil. We are going to look at 72, 70 and then 68.4, 67 levels. Very fast, and maybe this week itself if it continues to stay below 74, then and then only. Now let's have a look with the help of indicator, because it is equally important to understand what does the indicators are suggesting here. Now first part is, see the crossover here between the 20 and 50 period. This was a bullish cross. Now it is again started to converge. Second is that 50 and 100 is yet not crossed over. This is a mixed sign which it is giving. Now this is also an important zone here. You can see this 79 to 77, 76 zone. Very important. All the movements are cluttered here, and hence you should be careful of this. And if you look at the super trend is already bullish here. It is still in buy side till the time it stays above 76. Possibly it is going to be remaining in green, rather till the time it stays above 75.9 levels, then only below which further bearishness is going to prevail. At the same time, on the upside, something you can look of the 80 levels, because this is a top of the channel there. Above 80, more bullishness is going to be seen. Now see the Bollinger after widening here now have started to converge and now are trying to trade with a very minimalistic movement there. If you look at the stochastic, this is extremely oversold. If you look at MACD, this is started to diverge and now trying to trade with slight bearishness. You can see this crossover has happened here. Traded bullish now. So far it is trying to look down. However, a sudden turn, because we have seen a green candle. Let's see the next candle which direction it takes. Further divergence may bring more bearishness for the near future. And if you look at the movement here from extremes to extremes, minus 200 to plus 200, and hence a little retracement is a must here. RSI has dropped a bit. Now look at the week. On the weekly charts, station between the 20, 50, 100 weeks average, also at the median of the Bollinger Bands. Now it is trying to fill the gap. That is what I can see here. It traded at the extremes outside here and outside here, but now again back into the zone there, back into the channel there. On the downside, be careful till 76.4, 75.8 zone. Very good support lies there. Stochastic is over. You can see the weekly stochastic has come to overbought levels. See, whenever it goes to overbought levels, it sustains there for a couple of weeks and then this retracement happens. Now obviously there is one red candle, so there could be a downward move here. Now look at MACD, specifically MACD. See the MACD here has crossed over at bottom. It is still trading with divergence. Hence, even if this month stays bearish, this should not be considered bearish as such, as it can give you a very good revival. Now see, first of all, look at the highs here at plus 1000, the extremes which oil has seen in the recent past. It has seen a sharper drop there, trying to now consolidate here at bottom, and possible recovery is expected here. Right now, till the last week it was divergent, but this candle has tried to diminish the bullishness there. The RSI is trying to look downwards, and if you look at the monthly, now look at monthly charts here, trying to converge here, almost trading flat rather. The stochastic, which was oversold, have started to look upwards, though the candles are red, but still it is looking upwards. That is interesting. The MACD is still divergent and bearish. Now see this, the rise there, the drop here, and if you look at the candle side, this is almost flattened. So on the monthly chart, the bearishness is not yet gone. Yes, there is a possibility of a slight convergence so that they can come closer, and then from there the divergence can start, because we have seen 3 to 4 straight red candles. The RSI was almost trading comfortable there, neither bullish nor bearish. Now we have seen the charts, we have seen the indicators. Time for me to define the trading levels and strategies so that you can trade profitably, you can trade comfortably. And before I provide you the levels, yes, if you want to learn this art of trading profitably, you should join my mentorship batch 21. It starts on 1st of May. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Now where to buy? First of all, only buying entry I will recommend, or only bullish entry, is above 78.4, where you can expect 78.8, 79.2 as the first target zone. I'll take it as a complete zone here, because this is a range where it is going to get the first resistance, and then 79.8 and 80.2. Now only if it breaks past this 80.2, there is going to be increasing bullishness beyond that, which is going to take it for 81, 82.5, and beyond that sky is the limit on the upside. 82.6 rather I will say, and beyond that sky is the limit on the upside. Possibility exists that after filling the gap it can bounce back. Now when I say filling the gap multiple times, So a possible sell entry also exists here, and then you can sell here at 77.6 levels, below which you can expect 77.2, 76.4, 75.8. Now remember, at 75.8 the job is done. However, it can still try to stretch a little, and then we can expect 75.0, 74.1 levels. These two levels, this zone is important till 73.5, because below this it is going to accelerate strongly on the downside. Now see, mark the key levels, and remember, every milestone matters. It does not mean that these levels, and somebody was saying that after 100 it is always 99, and if you mention 99 there is no point by these levels. It does not happen this way. There are supports, there are resistances, and remember, when I say after this happens, it is always going to strike those levels. And those who do not want to profit, I cannot help them out, and hence you have to stick to these levels. These are carefully curated levels. Take your trades accordingly. Trade with a stop loss, trade with a trailing stop loss. Do not forget to like, share, subscribe and comment. Join my mentorship batch and signals channel. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Reach out to me for more details. Thank you very much. Have a great profitable trading week ahead. Thank you.